My name is Dana Durham. This is presentation number 3 for Accounting 6650. My presentation is on accounting fraud. In the past decade, our country has seen large public corporations fall because of accounting fraud. Unfortunately, the effects of this fraud has touched many individuals. People have lost jobs, homes, retirement, and many have faced public embarrassment. Change slide. One of the most public spectacles of accounting fraud was seen in the Enron scandal. One of Enron's biggest mistakes was that they used special purpose entities, SPEs, to hide debt, boost income, and manipulate their equity on Enron's financial statements. Part of the problem was these entities were specifically designed for that purpose. They were all owned by Enron executives, and they were used solely for these purposes of hiding and manipulating Enron's financial statements. About a year after Enron came the downfall of WorldCom. WorldCom's biggest mistake was that they had lease agreements and for telecommunication lines. Well, when the dot-com bubble burst, they were unable to maintain these leases without showing a reduction in profit. So instead of showing less than their earnings ratio percentage, they decided to start capitalizing these line costs as assets rather than using the correct method of expensing them on an income statement. And this underestimated their expenses, overestimated their income, and overestimated their assets when on their financial statements when investors would look and see. Change slide. Lehman Brothers was a financial investment company, and they basically overextended themselves. Before the housing crisis happened, they were buying assets and turning around and selling them. Well, they decided to start buying assets and holding them for themselves as investments, which wasn't so bad until the housing crisis literally stopped the selling of assets, of like properties. So they had all of these assets and they were unable to unload them. Rather than show poor performance on their financial statements for their investors, they started using what they called Repo 105 and Repo 108 transactions, which was a buy, sell, well, you sold it and then you repurchased it transaction in order to get instant cash. So they started making these transactions, but rather than recording correctly when they received the cash, they, instead of recording a liability, they would record a securities asset. So it didn't make a change on the balance sheet, and it misled investors to because it looked like they had all of these assets, when in reality they had huge amounts of liabilities, but they didn't show up on their books correctly. And the last story that I want to share is Columbia Healthcare, who used to be owned by Quorum Hospital Management. Quorum would mandate that their hospitals prepare 2 sets of cost reports. The first report had accelerated expenses and was submitted to the government to be reimbursed for these Medicare expenses. The second set of cost reports was a more conservative set, and it was there just in case the government rejected any of the expenses previously submitted. They were trying to defraud the government Medicare system by overstating expenses. Change slide. After the huge downfall of Enron, the Sarbanes-Oxley Act of 2002 was written into law. The purpose of Sarbanes-Oxley was to hold executives and managers more accountable for their actions. Now, there were several convictions and indictments on all of these earlier fraudulent activities. Many were sent to prison, anywhere from a year to 25 years in prison. And you would think that would be enough to deter fraud and illegal actions. Change slide. Unfortunately, punishments are not enough to stop the fraud. It is essential to educate accountants, auditors, shareholders, owners, managers, executives, and employees about ethics and corporate responsibility. After all, we have seen firsthand what can happen to our economy when fraud and illegal acts are allowed to run businesses. Thank you.